This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead. With insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, across Bloomberg platforms, Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. It is, well, welcome back. Hi, I'm back.
Welcome back to you, Carol Massar.
I have to say, it's so good to step away. We followed the headlines. Lots going on the last 2 weeks, I know.
Hold on. I was here, okay? We followed the headlines.
I did too from my phone.
I was here doing the headlines, okay?
You were. It was so busy. It was kind of crazy.
We missed you. We are glad you're back.
I'm glad to be back. I love you, Tim. I love our team. So I'm kind of getting ready for what's to come in September because, man, it is a crazy, crazy month. It's usually, at least it has been the last 3 decades, the toughest one for stock returns. So we're going to talk about the markets, the setup in September. And what else? We got a lot going on.
Yeah, jobs report is coming this week. A Fed decision in nearly 2 weeks. Countdown to a possible October 1st government shutdown. Fortunately, Michael McKee is with us. He's going to help break down all of these things. And maybe he'll give us some advice for winning that next Powerball jackpot.
$1.3 billion. No winner last night.
Okay.
Get your numbers ready.
I guess it was you. You're here. Mike's here. Lisa Mateo's here, which means that
I wouldn't be here.
None of you guys won. Is that what it is?
You would come in. I would come in.
Oh, if I won?
Yeah.
Well, I'd come in because you have to turn in your badge.
Calls it like it is. All right, we're going to get to Mike in just a moment. Hey, we're going to talk about U.S. trading partners dazed and confused after tariff court losses, a story that was all over the Bloomberg over the weekend. We got to dig into that one, Tim.
Yeah, plus President Trump's fight with the Fed's Lisa Cook and the ties that bind. We're going to look at China, Russia, India, and the axis of power, Carol.
And we got a mega deal undone and pressure on PepsiCo. Lots coming your way in the next 60 minutes. Let's get to it with Lisa Mateo. She is in for Charlie Pellet. Hey, Lisa.
You got it. Thanks, Tim and Carol. Wall Street returned after the long holiday weekend, kind of on a down note. The weak traders looking ahead to key labor market data with the jobs report on Friday. So let's start with the NASDAQ. It's down about 1%, 250 points. We have the Dow off about 0.6%. The S&P 500 off about 0.9%. In the yield space, we have the 2-year 3.65%, and that's down about 3 basis points. The yield on the 10-year 4.28%, and that's down about up about 5 basis points. To commodities, gold hit a record. Let's check out COMEX gold right now at $3,593 an ounce. We go to WTI crude, $65 a barrel. The Bloomberg Dollar Spot Index right now it's up about 0.5%. Few companies making news. We'll start with Anthropic. It has closed a deal to raise $13 billion from investors. It's a new funding round that nearly triples its valuation to $183 billion. And Kraft Heinz, that's its plans to split into 2 publicly traded companies. One will include, yes, the Heinz ketchup, other condiments, boxed meals. And the second company, that'll include that slower growing grocery products like Lunchables. Kraft Heinz shares down about 7%. Activist investor Elliott Investment Management, it has built a $4 billion stake in PepsiCo. Now that move actually makes Elliott one of PepsiCo's largest investors. PepsiCo shares they are up about 1.5%. And finally, the U.S. pulling Taiwan semiconductor manufacturing waiver to freely ship those essential gear to its main Chinese chip-making base. Checking in with ADRs, they are down about 0.4%. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo, and that is a Bloomberg Business Flash.
Hey, thanks for that update, Lisa. Redhead crossing the Bloomberg terminal. Rachel Metz of our Bloomberg News team reporting that OpenAI has agreed to buy the product testing startup Statsig for $1.1 billion. It's an all-stock deal, the company said, marking one of the largest acquisitions in the ChatGPT maker's history. OpenAI was a client of Statsig, or is a client, including Milwaukee is a client, Riot Games is a client, Electronic Arts is a client, Microsoft is a client. And I'm looking on the website, Carol, Bloomberg is a client as well.
All right, so good to know, right? Stuff certainly continuing in the AI space. All right, we're going to be focusing on that, but really our focus for today, we're thinking about September and all that is coming at global investors, including some news that broke late Friday. A federal appeals court ruled then that President Trump's global tariffs were issued illegally under an emergency law upholding a May ruling by the Court of International Trade. That late Friday action really extending the chaos in global trade. We want to know how strong an action this is legally. Could it lead to an undoing of all the tariff actions by the Trump White House? What does it mean potentially for everybody who's watching, investors and also the Fed that's watching and that makes a decision in just about 2 weeks from now? We also wanted to get the latest on Lisa Cook and that legal fight that she is having with President Trump. So let's get to it. Erik Larson in the house, Bloomberg News U.S. legal reporter, and also Bloomberg TV and Radio International economics and policy correspondent Michael McKee, both here in studio. Erik, let's start with you. The ruling on President Trump's global tariffs. Explain the case, the ruling, the significance. Is this a big deal?
Yeah, it was definitely a big deal. We weren't necessarily expecting it Friday night, but it came in, as you said, it upheld the ruling from May of the U.S. Trade Court finding that Trump had issued those tariffs illegally, those Liberation Day tariffs, because they were issued under an emergency law that had never been used in that manner before. The majority of the appeals court just said flat out that's not why Congress passed that particular law. Therefore, all these tariffs are illegal. But in a bit of a twist, they said we're going to go ahead and delay or stay this ruling until it goes to the Supreme Court potentially. So right now the tariffs remain in effect, but once again, judges have held that they were issued illegally.
So, Mike McKee, come on in here. You haven't got any calls for refunds yet on tariffs that you've paid?
It's an interesting question of how that would be done, because we've never had this situation before.
It is a serious question, though. I mean, this is something that's been written about,
It's a serious question. One would presume that if they were forced to refund all of the tariffs that had been collected, they would probably essentially go back to the importers of record that paid it. But of course, the administration's been arguing that most of this is being paid by overseas countries. And also, we all know that we've been paying it. Now, how much have you paid in extra cost for tariffs that you should get your money back on? So that's going to be something that I'm sure will be fought about in the courts as well. And then they have to set up a system, presuming Trump moves on to the other tariff possibilities that he has, to collect those tariffs, and I'm sure there will be lawsuits filed on those. So this is a long way from being done.
Well, that's what I want to understand, Erik. Like, what is the next legal action, and how likely is it in an environment where the unthinkable continues to happen? You know, the logical doesn't necessarily happen. So walk us through that.
Sure. We can expect that Trump at some point will ask the Supreme Court to take the case. We can expect they probably will agree to do so. But both sides are going to come to the court and say that they're going to suffer more harm from this illegal act. And you can expect that the administration would say, look, these tariffs are already in place. How could you undo them now? We're already collecting billions of dollars on them.
Right.
We're in the middle of trade deals. So they're kind of saying it's too late. We have to move forward with these tariffs because it's already done. Of course, the plaintiffs in this case, a group of Democratic-led states and small businesses, are going to say, well, sorry, you should have known that going into it. In fact, you knew that they were illegal back in May when the trade court said so. And so you've created a mess, and therefore you're just going to have to get out of it, probably with these refunds, as we discussed.
But with this Supreme Court, just one more on the legal, I mean, should we assume that this is a Supreme Court that seems heavily stacked in President Trump's favor? So should we assume?
Well, we never want to just assume
Fair.
that because he has a 6-3 conservative majority that has ruled consistently in his favor, even in times when a lot of legal experts would have expected them not to, based on precedent and the Constitution. Sure, it could go either way. So
Tim's laughing.
It's been interesting because I've been seeing legal analysts and scholars write this weekend that this should be a slam dunk case against the Trump administration because there's nothing in the Constitution that gives him tariff power, and there's also the non-delegation clause from Congress, and it seems to law professors that it's very weird that the court could do the opposite, but nobody thinks that's impossible.
But Mike, isn't there a backup plan that the Trump administration has, at least when it comes to implementing tariffs of a certain sort they could use a different emergency measure?
There are a number of different tariff authorities that he can use, some of which he's already using to put on the tariffs on steel and aluminum and autos. There are tariffs he can put on for national security purposes, although there has to be a finding that there's a national security need.
And there's a certain expiration date on some of these, right?
Well, the one that people are pointing to is a section of the tariff law that allows him to put on tariffs if there's a situation where the United States is suffering from unfair trade that lasts for 150 days, and they can put 15% tariffs on. And so that could be a bridge to whatever they end up doing there. But a lot of that's the universal one, and a lot of these others would have to be done country by country, which would take up some time, A, to get the reports done, and then B, to figure out how to implement them and what level of tariff you're going to put on.
Before we wrap up, I just want to spend a minute on Lisa Cook. Erik, what's next in that legal battle that you think we should have on our radar? This is, of course, the Fed governor that President Trump has fired, and Lisa Cook has filed a lawsuit against the president.
Right. So essentially, there was a hearing on Friday morning. There was no ruling, but what we're waiting for is a ruling on whether or not she can stay in her job while this case proceeds. So either a temporary restraining order that would keep her in her job for a few weeks or a little more, or a longer lasting preliminary injunction that would last for the rest of the case. And right now, we don't even know exactly which type of ruling the judge will issue. There might be negotiations behind the scenes that will prevent the need for an emergency TRO. So we're going to get another filing from Cook today, this afternoon, potentially. We might get another response from Trump's side, and then it could be days before we get a ruling.
This just into the Eyewitness News Network. While you were talking, I got an email from your editor.
Yeah, the September 4th.
The filing from the Cook side, the Lowell filing, is in, and apparently the lawyers for Cook want permission to file a longer brief, and so they have asked for Friday or actually Thursday, September 4th, and so and the government does not oppose that, so no ruling before September 4th. The question is, though, as Erik left it, is until such time, is she employed or is she not? We don't seem to know.
We don't know, and it's possible that they might tell the judge they've come to some agreement about her being able to stay in her job until there's a ruling, but we don't know yet on that.
Okay, just when we thought, we crossed some things off our uncertainty list.
It's always something.
Adding another one. You guys rocked. Erik Larson, Bloomberg News U.S. legal reporter, and Bloomberg TV and Radio international economics and policy correspondent, McKee. Just some of the issues, Tim, coming at investors this month.
Yeah, we're going to stay on that and how that may be, should be, could be impacting those, and how investors sum up the environment and make decisions or put off those decisions, Carol. He's the author of The Confidence Map, Charting a Path from Chaos to Clarity, a book that digs deep when it comes to decision making.
So delighted to have back with us a friend of the program, Peter Atwater, president of Financial Insyghts and adjunct lecturer of economics at the College of William and Mary, joining us from just outside Philadelphia. Peter, great to have you back on the first trading day of September. A lot coming at us. Summer's over, September's here. We always feel a kind of a mood shift. Any reason to think that this month will also potentially be problematic for investors? Is it maybe a different September this time around?
Carol, thanks for letting me be here today. Yes, I do think it's going to be a very challenging September. Several things on my radar screen. I'm watching European sovereign yields. And already today we've seen a clear linkage between higher yields and lower equity markets. And if that narrative continues, that could be quite a moment for the stock market, because politically, France, Germany, England is a real melting pot today of populism. So that's very much front and center in my mind.
How bad or how problematic might it get then for investors? Like, how do you see it potentially playing out? And do you also anticipate, we mentioned your book, The Confidence Map, going into this, and we do think about what's on top of mind for investors right now when it comes to making decisions, whether or not to deploy assets, to pull back, like what to do in this environment once again. And then we just talked about the trade, ruling on trade, whether or not all of that we've been living the last, 5 or 6 months, comes undone.
Yeah, when I look at the population today, particularly on the investment side, there is a sense of invulnerability like I've not seen. Certainly makes what we saw in 2021 look timid. Investors, particularly retail investors, believe this market is unsinkable. I saw somebody analogize it to Rasputin. This is an unkillable market. Both of those really trouble me because they suggest that investors think that they can continue to ignore the geopolitics around them. And I don't think that will ultimately prove to be the case. At the same time, though, I see despondence, particularly among the low-end consumer. And I used to talk about the arms and legs of the K-shaped economy. Now I have to talk about fingers and toes because the clustering has become so extreme at the very top and at the very bottom. And that gap now appears to be uncrossable. And as we see over and over in history, shared powerlessness is something that unites those at the bottom. And so I think policymakers on both sides of the aisle need to be attuned to that.
Hey, Peter, we're getting some headlines from President Trump right now. He's speaking on the Scott Jennings radio show. He says he's going to appeal the tariff ruling. He said that he repeats that global tariffs are an economic emergency. And he said we'll see a reverberation if we don't win on tariffs. How in your view, should investors be thinking about this? Because you talk a lot about chaos and clarity, and I think there's more chaos than clarity. I think it's fair to say right now when it comes to at least the policy as a result of legal battles, as a result of the back and forth with these lawyers, with these rulings. It's not necessarily clear what is happening.
No, it's not clear, but this is a continuation of very me here now decision making that we see on the part of the new administration. And I think that for investors, they've presumed that when markets decline, the administration will step back and pivot in their favor, the taco trade. And I think what's becoming reality is that those who are running businesses, and we saw this in the manufacturing reports earlier today, that they're really struggling with the uncertainty and powerlessness that they feel. And the result is, in those situations, as you would expect, they're pulling back on orders, they're making more deliberate employment decisions. And so the real economy, I think, is decoupling from the markets, and the markets believe that they ultimately prevail. And I think the real economy is about to show them that's not the case.
What's your take on the president in terms of watching the financial markets and his willingness or unwillingness to back off of policies that upset things? Because we did see kind of a 180 when it came to tariffs way back when or earlier this year. But how do you see that now, or how do you factor that in now, Peter?
What I see since then is a growing sense of invulnerability. And I see that politically, financially, economically, that the administration sees itself and sees its decision-making as just irrepressible, that unopposable. And those suggest to me a level of insularity, isolationist, that is increasingly decoupled from what we're seeing on Main Street. It's very interesting to me that we haven't seen the president out doing rallies in this new administration the way he did before. And instead, he's very isolated in the White House and Mar-a-Lago and places where...
Why do you think that is? Because the energy of the rallies was something that a year ago we talked a lot about, and even up to the election. And we know he likes to even go on tour to celebrate what he views as wins. Why do you think he's been quiet about this?
My own view would be that he doesn't see it as necessary at this point. He's won. And so there is a sense that, that support is no longer needed for him to be effective in his role. And I think that's a challenge, will become a challenge, because it's one thing to unify a crowd against a common enemy, in this case, former President Biden. The challenge is then maintaining that momentum and cohesion post-victory. And so it surprises me too, Tim, that we haven't seen him out there trying to sustain the crowd.
So, Peter, in our next segment, we're going to talk a lot about what seems to be kind of the new axis of power, China, India, Russia. And I do wonder, as we talk about the U.S. seemingly or accurately or actually turning more inward and the rest of the world kind of moving on in new alliances, what does that mean for the U.S. financial markets? What does that mean for U.S. investors?
I think you're seeing not only the United States turn inward, but Europe turn inward.
Right.
It too is pulling back, and not only globally, but among itself. And so it's very interesting to me that we have a Western world that is increasingly isolationist at a time that the Eastern world appears to be coming together. Now, having said that, we're talking about three very dominant, independent, nationalist leaders who today it is very convenient for them to create what looks to be cohesion against the West. But I wouldn't underestimate that if confidence drops in those geographies, they too will become very inwardly focused.
We're talking with Peter Atwater, President of Financial Insyghts, adjunct lecturer of economics at the College of William and Mary, and of course, the author of The Confidence Map. Do you not buy the images, what we're seeing in all the footage, the handshaking, the laughing between President Putin, President Xi Jinping, and of course, Prime Minister Modi? Do you not buy it? Is it just for the cameras?
No, I do buy it. I buy it particularly symbolically that it behooves them to demonstrate that they are cohesive against the new administration. But it's one of those cases where, my enemy's enemy is my friend, and that is only effective so long as the three of them continue to see the Trump administration as their joint adversary.
Peter, before we let you go, just an update from you about a question that we first discussed back in March when you were on the program, when we asked if you believed the U.S. would be uninvestable. This was pre so-called Liberation Day. I'm curious if you think the U.S. is more or less uninvestable at this point now than it was back in the spring.
No pressure, but that response kind of went a little viral. I'm just going to tell you that.
Yeah, so I do believe that it is more uninvestable today than it was before in March. And my reason has to do with the substantial diminution of shareholder primacy that we've seen. The new administration has been very aggressive in pursuing nationalist economic policies. And I think that makes the United States, particularly at these valuations, far less attractive than it had been.
All right, we need to run. Peter, as always, thank you so much. Be well. Peter Atwater, President of Financial Insyghts, adjunct lecturer of economics over at the College of William and Mary. And as we mentioned, his book, something we've talked about on air with him, The Confidence Map, Charting a Path from Chaos to Clarity.
Let's get an update on the trade. We're still in the red, but for an eye on everything that's happening, here's Lisa Mateo in for Charlie Pellet. Hey, Lisa.
You got it. We are still in the red. Wall Street kicking off September trading lower. We have the NASDAQ down more than 1%. Same for the S&P 500 and the Dow down about 0.8%. Heading over to the two-year yield, 3.65%, and that's up about 3 basis points. The yield on the 10-year, 4.28%, and that's up about 5 basis points. The Bloomberg Dollar Spot Index up about 0.5% on the economic calendar for today. today. Well, U.S. factory activity, that shrank in August to about 48.7 for a sixth straight month. And that was driven by a pullback in production. Now, the ISM's manufacturing index, it saw a slight improvement from 48 in July. In other news, OpenAI, it's agreed to buy product testing startup Statsig for $1.1 billion. It's an all-stock deal. It's one of the largest acquisitions, actually, in the ChatGPT maker's history. Then Jane Street Group, they pulled in a record $10.1 billion. Its net trading revenue in the second quarter, beating out all of Wall Street's biggest banks. Well, it looks like consumers continue to spend on jewelry. Signet Jewelers, that's the owner of Zales and Jared. Well, they raised their full-year sales guidance. Their shares are up more than 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash.
All right, so appreciate it. Lisa Mateo there, in for Charlie Pellet. I'm Carol Massar, along with Tim Stenovec, live here on Bloomberg Businessweek Daily. Okay, so we say this a lot, but we're definitely living in some very interesting times. Take what happened yesterday. Cameras capturing Chinese President Xi Jinping in a rare, unscripted huddle with Russian President Vladimir Putin and Indian Prime Minister Narendra Modi. Timmy.
Yeah, the point, President Xi's most powerful partners in resisting America on the world stage happened at a summit in the Chinese port city of Tianjin. At one point, President Xi held the hand of his Indian counterpart as the three men laughed casually. It was a striking scene given just months earlier, New Delhi and Beijing were seen as rivals. Here's Leland Miller, co-founder and CEO of China Beige Book, taking note of the deepening relationship between India and China earlier on Bloomberg Surveillance.
If you look what's happening with India right now, India doesn't want to be looking around the room and see China on the left and Pakistan on the right and Belarus across the room. I mean, it would rather be in a group of countries, the United States and others, and strengthening trade relations there. But it will push back if it thinks it's being pushed into a corner. And so we're seeing a situation where China is becoming an attractive option because it's not the United States right now.
All right, that is Leland Miller, co-founder and CEO of China Beige Book, earlier on Bloomberg Surveillance on Bloomberg Television. Let's get to it and explain or get a little bit more detail on how she sees what the cameras captured at the meeting of leaders of China, India, and Russia, and what's really going on behind the scenes. Back with us is Wendy Cutler. She's VP, Vice President of Asia Society Policy Institute. She joins us from the nation's capital. Wendy, good to have you back on with Tim and myself. So let's go there. You spent 3 decades as a diplomat, negotiator in the Office of the U.S. Trade Representative. The significance of what was captured on cameras of those three leaders. Let's start there, and then what you think might be going on behind the scenes.
Quite a big, important week on the other side of the world, where three of the most powerful leaders in the world really showed an affection and agreed on an agenda going forward. And frankly, for me, seeing Modi as one of those three leaders comes as a surprise, given where we were just 3 months ago with India, where we were on the verge of concluding one of the earliest trade agreements with Delhi. And so, boy, things have changed quickly. I'm not saying that Modi is all in with Xi Jinping and Putin, but he sure looked comfortable this past weekend with his fellow leaders.
Is there a way, in your view, for the U.S. to bring India closer or back to the point where it was, as you say, 3 months ago? Obviously, last week with those 50% tariffs that went into effect was a big deal between the relationship between these two countries. But is there a way to go back to what it was?
I think it's going to be really hard to get back to where we were 3 months ago, but I do think that we can move in that direction. And the best step forward would be to find a way to agree on a trade agreement with India. We got very close. There were very few issues left, including, the extent we could open up India's dairy market. And given the importance of this geostrategic relationship, I would hope that we could find a way forward on the trade front, allow for the relaxation of the tariffs, and move in the direction of getting this relationship back on track. But I think some permanent damage has been done, no doubt about it.
Well, that's, Wendy, when I see these pictures, I mean, these are very important leaders. And, it's not mean girls and they're like, don't like a girl. And, they're just like, let's get together to like tick somebody off. I mean, these are leaders of very important countries, geopolitically, economically. What they do matters. So it's not just something you do casually, right? So as you say, this is pretty significant, and this is going to have a lasting impact beyond President Trump being in the White House.
Absolutely. It took us 20 years through a number of administrations to warm relations with India to the point we were 3 months ago. And it's always easier to build, to destroy relationships or to hurt them versus to build them. So this is a big setback. That said, I think we should also keep in mind that India and China, there's a lot going on between those two countries. And while relations may warm up, they have some serious challenges that have plagued their relationship, including a border dispute, including a large and growing Indian trade deficit with China, and the fact that China is flooding India like other countries in the region with a lot of exports that are displacing its local production. So again, I think we just need to kind of keep this all in mind as we sign off the United States and say China and India are best friends. I think each of those leaders knew what they were doing. They wanted to show the world that, they're a group and they're working together, but they're also very skilled politicians. And I think there was a reason why each of them wanted to send that message to Washington in particular this weekend.
On China and Russia specifically, we're getting comments from President Trump right now. The Scott Jennings show is playing a recording of an interview that was done by the president recently. The president says, quote, he says, quote, they'd never use their military on us, talking about Russia and China, and he's not concerned about China and Russian ties. Should the president be concerned about China and Russian ties?
Yeah, I think every president, every administration should be concerned. That said, these ties have been strong for many years, and Xi Jinping and Putin have met, over close to 50 times since both of them have been in office. So those ties are going to continue to be close. But to say we don't care or that's not a big deal, I don't really agree with that. I also think that for this administration, they're looking to improve their relations not only with Russia, but with China as well. And so in some ways, it's in their interest not to look like they're working against those two countries working together, but more trying to be more nonchalant about it.
Wendy, something I want to ask you, and also the president speaking, as Tim mentioned on Scott Jennings' radio show, another headline is the president repeating that the global tariff situation or global tariff is an economic emergency. There are some that would argue that the U.S. needed to step up its efforts to protect its markets. And it wasn't just a Republican thing. It was a Democratic thing as well. If you think about the pushback specifically against China, the pandemic revealed how much of our supply chains were overseen by China. So what the president is doing and his team are doing does make sense to you. What doesn't?
Well, here's the deal. There are a whole number of trade laws that the president could use to pursue our trade agenda against China. He used Section 301 of our trade law during Trump 1.0. No one challenged his legal authority to use that statute. So this is coming down to his use of a statute, IEEPA, which basically is premised upon a national emergency and then gives the president unlimited power. And that's where the courts are pushing back. But from my point of view, there are other statutes that frankly could be used and are more fit for purpose than IEEPA in the current situation.
Hey, well, one of the things I do want to ask you, since we just did a big conversation and deep dive into that ruling we got, was it Friday night, where President Trump's, the federal appeals court did rule that President Trump's global tariffs were issued illegally under an emergency law, so upholding that May ruling by the Court of International Trade. It sounds like there's going to be some back and forth before we finally get a resolution. But how do you think that might ultimately end up? Will they be overturned or not likely? I don't know. Do you have a good thought on that?
I don't. And anyone who says they do, I don't believe them. I think we'll probably end up going to the Supreme Court, and none of us can predict what could happen. But the point I would make that even if the president loses and the Supreme Court votes against him, again, there are other trade laws that he can use to advance his trade agenda. So yes, it would be a setback. But I don't think it would mean that, he's going to give up on tariffs. I think we're living in a tariff world under Donald Trump for the next 3.5 years, whether we like it or not.
Do you think that it will just be for the next 3.5 years, and the next president, even if it's a Democrat, would actually remove these tariffs? Because this is a significant source of revenue for a government that likes to spend money, whether you're a Republican or a Democrat. That's what we've seen take place in the White House. And one that has now, thanks to the new tax bill, has lost some serious sources of revenue.
Mm-hmm. And the other point I would add is that Biden kept many of the Trump tariffs in place as well. So I think you make an excellent point. That said, the next president may have, a different agenda in putting a lot of emphasis on trying to work more closely with our allies and partners. One of the first things they're going to ask for is a relaxation of tariffs. So I'm not sure that all of the tariffs would remain in place as is, or there could be, other options and other agreements reached or other steps taken which could allay some of these concerns.
Yeah. But it makes it tricky then for investors or just the world at large or CEOs to make decisions when it could switch again in 3-4 years or so on. Hey, Wendy, thank you so much. Wendy Cutler, VP of Asia Society Policy Institute, joining us from the nation's capital. When we come back, action in the consumer packaged goods space, a mega deal undone, and then some pressure on Pepsi. That's next.
It is 2:40 on Wall Street. I'm Lisa Mateo. Markets watching the next steps from the Trump administration after most of the president's global tariffs were ruled illegal by a federal appeals court late last week. Let's get right to it. We'll start with the Nasdaq. It's down more than 1%, 280 points. We have the Dow off about 0.9%, 427 points, and the S&P 500 off about 1%, 73 points. Over to the yield space, the 2-year 3.65%. That's up about 4 basis points. The yield on the 10-year 4.27%. And that's up about 4 basis points. To commodities, we'll check in with WTI crude up about 2% at $65 a barrel. We have spot gold at $3,530 an ounce. To currency, the Bloomberg dollar spot index, that's up about 0.5%. Shares of Target, they are down nearly 4%. That's the most since mid-August. And the reason why, well, the American Federation of Teachers, they endorsed a boycott against the retailer's decision to end some diversity programs. Then we have shares of low-cost airline Frontier. They are flying high, up about 13%. Deutsche Bank, they listed the recommendation on the carrier to buy from hold, saying that it's best positioned to benefit from Spirit's bankruptcy. And Sumitomo, a lead group, we're going to buy aviation finance firm Air Lease for $7.4 billion in cash. We check in with shares of Air Lease. They are up about 6%. And Elon Musk predicting Tesla will derive about 80% of its value from humanoid robot Optimus. Now, this is an initiative he first talked about 4 years ago. Meanwhile, deliveries from Tesla's Shanghai factory, they extended their slump in August, and the company's long-awaited entry into India, that's delivered underwhelming results so far. Apollo Global Management set to launch a $5 billion strategy to invest in sports deals, marking another major asset manager targeting that booming sector. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash.
I don't know about you, Lisa, but I am so into a humanoid robot. Like, bring it on, do my laundry, do the dishwasher.
Yeah,
right? Like, totally. Like, I'm just so into that.
Until it
takes
turns
over?
against you.
Locks you in? Like, I don't know.
Until it turns into the boss. Then what happens?
I don't know.
It's all fun and games.
It's all fun and games until it turns against you.
Yeah.
What's that movie that was on one of the streaming? It's, I can't think of it. It's the daughter of Brian Williams, Allison Williams. And she brought home, like, It was like a robot. Come on.
I don't know
You're
what it is.
You're the cool one who watches all the good streaming stuff.
False. I am finally catching up on Black Mirror, though, which is a good thing to watch.
I am not. That just seems so creepy.
It is, but if you think about it, I mean, I was thinking about it, like an episode from like 10 or 12 years ago literally is our life right now with the AI chatbots and, things being able to be programmed in the,
you just
by
want to talk
analyzing.
South Park, don't you?
No.
Come on.
It is having a season
I know.
that is bringing back viewers.
It's pretty,
which is pretty remarkable.
They're being very topical.
Yeah.
Kind of like SNL, like when it's
and they're taking 2 weeks in between episodes to really
deal with the news
and bring you those current events.
I think it's pretty cool stuff. Anyway, I think it's kind of interesting.
Carol Massar, big South Park fan.
Oh, I'm behind the times, but I'm like catching some clips online, and it's pretty funny. And whether you like it or not, it's just, I don't know. Humor is a part of culture. It's okay.
Hey, did you see what's going on with Kraft Heinz?
I read in this morning.
Yeah, shares are lower today by about 7.5%. The company's planning to split into two separate companies, one selling Heinz ketchup, the other iconic condiments, the other including slower growing grocery products. Warren Buffett coming out and saying he's disappointed in the planned split of the company, though he concedes the merger he orchestrated a decade ago was not a brilliant idea.
Yeah, I think it's very interesting. I mean, it was kind of iconic when they came together. He did speak with Becky Quick over at CNBC and about this specifically. I will say what's interesting, too, and our write-up on this, we remind everybody that the Kraft Heinz bet marks a rare misstep for Warren Buffett. In recent years, the maker of Heinz ketchup and Kraft mac and cheese has been grappling with inflation and a major shift in consumer preferences away from packaged foods. I mean, think about how you eat, how I eat, how many people eat. It's not like it was maybe 30 years ago, 25 years ago, even 10 years ago.
No, it's changed a lot, and what consumers want has changed. But it also comes at a time where you're seeing companies that for really a better part of the last decade thought that bigger was better and together is stronger. So, you look at what happened last week with Keurig Dr. Pepper,
right, or
even just in the last couple of years with the breakup of GE and the way that some of these companies have been able to kind of hit the ground running, at least for shareholders. So I know this stuff is very cyclical, and what moves one way or another way might not always happen, but we're in an era right now where companies are deciding, okay, well, 1 + 1 is 3.
Right. And the news or the trends or the numbers don't lie in terms of what people are buying or not buying. So let's talk a little bit more about it. As we mentioned, Kraft Heinz, we've seen that stock down as much as 7% today. We also have some news on PepsiCo, Elliott Investment Management building a stake of about $4 billion in that company. And we do see PepsiCo rallying roughly 6% at its highs today. So with us is Ken Shea, part of our Bloomberg Intelligence team. He's senior analyst for consumer products. He's out there in our BI headquarters in Princeton, New Jersey. All right, Ken, we just talked a lot about Kraft Heinz. Let's start there. Why is this happening? Is it all about consumer preferences and trends?
It boils down to just that. It was only, 2012 that Kraft spun off Mondelez, and at the time said,
a name of a company that I still am like, what is Mondelez?
That's because it was made up. It's a name that was just for Mondelez.
It's like a far, far away land that you go to in Disneyland.
That's what they want you to think it is.
Anyway,
sorry, Ken, go ahead.
Continue.
That's okay. And at the time, the thought was, let's break up the growthy business, the Oreos and the Cadbury, from the slow growth businesses, the Oscar Mayer and the cheeses and so on. Fast forward to today, and the company's just further segmenting that huge conglomerate. And now it's saying, okay, well, the grocery business, the cheese and the Oscar Mayer, poor guys, keep getting dissed, and the other business, which is high margin, and they're going to separate it. Does that add value? I guess time will tell, but it seems to me that what we learned was big conglomerates and slow growth businesses are tough to add value to. You have to manage them. You can't just keep carving them up.
Yeah, I mean, look what's happening in the media world with Comcast, for example, spinning off some of its media divisions into Versant, for example, or Keurig Dr. Pepper. And I'm just curious if this is, in your view, if this is something that's actually cyclical, or if this is kind of the new normal, where these companies are saying, wait a second, we're going to separate the high value, high growth stuff from sort of the legacy stuff, whether we're talking media or talking consumer packaged goods?
Well, it's a good question, and it kind of depends. In the case of Keurig Dr. Pepper, it was just clear that the cold beverage business is far outperforming the coffee business. And that's coffee costs, it's tariffs, but I think there's more to it than that. I mean, it's a cumulative effect of price increases. So that's kind of a company-specific thing, I believe. When it comes to Kraft Heinz, I don't believe it's really cyclical. I think it's changing lifestyles and preferences. I mean, we know with the GLP drug intake that consumers are telling us they're cutting back on high caloric foods, including red meats, and they're gravitating towards healthier options. They like convenient options, and so on. So it's really a shift in consumer taste, as we led the conversation with, that ultimately is driving this.
All right, folks, we are talking, of course, with our Ken Shea of our Bloomberg intelligence team. At the same time, President Trump is making some comments from the White House. This is live, currently surrounded by members of his administration. The Vice President Vance behind him as well. Secretary of Defense Pete Hegseth is there as well. So kind of monitoring some of the comments. As expected, this press conference talking about specifically the U.S. Space Command moving from the state of Alabama to the state of Colorado. Let's listen in just for a moment.
Alabama jobs, and probably much more than that, and hundreds of millions of dollars of investment, and that's billions, because it can't be millions, it's billions and billions of dollars. Most importantly, this decision will help America defend and dominate the high frontier, as they call it. I want to thank Secretary Pete Hegseth. He's doing a fantastic job. And Secretary of the Air Force Troy Mink. Troy, thank you very much. Great job you're doing, Troy. This is such a big deal. This is one that everybody wanted to know. What are you doing? I also want to thank Senators Katie Britt, and I want to give my condolences. Your grandmother, her grandmother just passed away. She was 100, right?
100, and she loved you, Mr. President.
Well, and she was very proud of you.
Thank you very much.
Very, very proud of you. So thank you, Katie.
Wonderful woman.
She must have been. To produce you indirectly, I can tell you she had to be. Tommy Tuberville, who's a great coach. And I won't say anything about what happened with Alabama football this weekend.
Let's leave that out.
But you're not used to that, right? You're not used to that. But Tommy, Auburn won, that's right. They did. So you're happy. Tommy's been a great senator, as you know, and a fantastic guy all around. He was also a tremendous coach. House Armed Services Committee Chair Mike Rogers. Thank you, Mike. Where's Mike? Mike, thank you very much. You're doing great, Mike. Representatives Barry Moore, all great friends, Robert Adderholt, Gary Palmer, and Dale Strong. Thank you all very much, fellas. Appreciate it. In my first term, I created a thing called Space Force, so important. You know, we were losing the race in space very badly to China and to Russia, and now we're far and away #1 in space, and reestablished Space Com with a mission to protect American space assets and detect any threat to our homeland. We initially selected Huntsville for the Spacecom headquarters, yet those plans were wrongfully obstructed by the Biden administration. And as you know, they moved them to a different locale. And today we're moving forward with what we want to do and the place that we want to have this. And this will be there for hopefully hundreds of years. That's where it's going to be. I will say I want to thank Colorado. The problem I have with Colorado, one of the big problems, they do mail-in voting. They went to all mail-in voting. So they have automatically crooked elections. And we can't have that. When a state is for mail-in voting, that means they want dishonest elections, because that's what that means. So that played a big factor also. In Huntsville, Spacecom will play a key role in building the Golden Dome, as you know. That's going to be a big thing. Everybody wants to be a participant in it. Missile Defense Shield, we're going to be having a Golden Dome that the likes of which nobody's ever seen before. The finest, the best. And by the way, Canada called. They want to be a part of it, and that'll be great. But Canada wants very much to be included in that, and we're going to work something out with them, I hope. It will also ensure that our technological capabilities, of which we're way ahead of anybody else, there's nobody close, remain unmatched long into the future. So I'd like to ask Secretary Hegseth to say a few words. He was very much a part of it. And really, everybody behind me was. Every one of these people would call me and lobby me. I said, Katie, I don't want to talk to you anymore. I know what you want. She said, that's right, sir. That's what I want. And they got their way. So I just want to congratulate. These are really special people. They're politicians in many ways, but they're great patriots, I think even more so than politicians. So they fought very hard to get it, and it's an honor to give it to Huntsville. Pete, say a few words, please.
All right, everybody, you have been listening to President Trump live there in the Oval Office, the Defense Secretary, Pete Hegseth, now stepping up to the podium. This is all about the president moving the Space Command, the offices, the headquarters, if you will, relocating from Alabama, a red state, I should point out, or from Colorado, I should say, moving it from a Democratic state, a blue state, to a red state, Alabama. So again, that's kind of the big headline. Also talking about working out something with Canada on the Golden Dome. And this is, again, kind of the protection in terms of defense.
Yeah, the president said that his specific problem with Colorado is about mail-in voting. And that's what his issue with the state is.
Yeah, exactly.
The president did, in 2020, we should note, vote by mail.
Yeah, so it's kind of interesting to see some of this stuff moving around, but nonetheless, that's kind of the key announcements. We'll continue to monitor the president's comments from the Oval Office and, of course, bring you anything of note. In the meantime, we do want to say thank you to our Ken Shea, who was talking to us about what's going on with Kraft Heinz, that splitting up into two separate companies. He is BI Senior Analyst for Consumer Products, joining us there from BI headquarters in Princeton, New Jersey. And you are watching Bloomberg Businessweek Daily. Carol Massar along with Tim Stenovec.
I'm Tim Stenovec along with Carol Massar. Let's take a look at some stocks on the move today. We're joined by Emily Graffeo from the Bloomberg News Cross Asset team. Emily, a lot to choose from, especially on the downside today.
Yes, but I'm going to start on a high note, Tim.
Okay.
Because why not? PepsiCo, ticker PEP. It actually was up as much as 6% today. Now it's up about 2%, but it's all on deal news. Elliott Investment Management confirmed that it has taken a $4 billion stake in the company. So Elliott's going to be one of the largest investors. And I guess the movement today in the shares shows that the shareholders like potential change that's coming with Elliott. They said that they said in a presentation, Elliott, that PepsiCo should review and streamline their snacks portfolio, divest underperforming assets, and they're also considering refranchising the beverage unit's bottling network. So I learned a lot about bottling
Well, it's
today.
something that Coca-Cola did years ago,
Yes.
and it worked out really well for Coca-Cola.
Yeah, basically, like, let PepsiCo focus on the brand and the marketing of the sodas, and then outsource all of the efforts that go to actually like bottling the soda.
Which
so
happens
that's
like with Coca-Cola, right? They have the whole massive bottling operations. I just want to tell you, it took me down to kind of doing some Googling, and all I could think about was Fritos, which is owned by PepsiCo.
Yeah. I don't know.
You like Fritos?
I love Fritos.
That's like one of their core brands.
It's
So I would imagine
good.
that PepsiCo is going to maybe focus more on making that brand
Fritos?
more Fritos,
Fritos with
maybe.
dark chocolate, perhaps?
Yeah, better than ever. The market value of the company has actually plunged more than 20% from a peak in May 2023. So although it's a name that we know and love, and we know the brands, they need, I guess, a little bit of help here.
Well, I think what's remarkable is pre-pandemic, and maybe just a few years ago, even after the pandemic, for quite a while, the snack brands business is what was helping to keep Pepsi afloat. And it was something that analysts said, hey, Coca-Cola doesn't have the snack side of the business that Pepsi does.
Right, it was seen as a benefit,
but again,
right?
Consumer preference is shifting.
Yeah, I mean, we're now eating a lot of veggies and hummus and all that good stuff.
That's just
you two are looking at me like, could you go on vacation again? All right, let's talk about Constellation Brands.
Okay, this is another story of maybe changing consumer preferences. Constellation Brands, ticker STZ. They're the parent company of a number of alcohol brands, Modelo, Corona. So they cut their fiscal 2026 guidance today, citing weak consumer demand. That's going to hurt inventory rebalancing at the distributor level. So that stock fell 7%. And if you look at what the CEO had to say, over the last several months, high-end beer buy rates decelerated sequentially as both trip frequency and spend per trip declined. I feel like we've talked about this on the show before of like
What?
Gen Z doesn't like alcohol
I know,
as much as maybe older generations.
We've had a lot of
It's true.
alcohol beverage companies who talk about like the pushback and declining numbers, whether it's wine, whether it's beer, right?
I mean, it's
Yeah.
not me,
it
but
makes
maybe
sense.
yeah, like
But
people out there.
in all seriousness, you don't drink during the week,
Right, yeah.
which is something I've learned about you. And I think
Yeah.
a generation ago, you wouldn't have heard that from somebody, you know, where you are in life, right?
Do you
They would
make
go
up for
out
it on the
after
weekend?
work and
Yeah, hopefully.
No, they
You're
go
making
out
me
after
sound so
work.
lame.
No, it's just different.
Yeah, no, I guess it is different. Gen
People
Z's
would go-
very, yeah, they're
people would
focused
go
on
out
wellness.
after work and they'd get a drink.
Right. Yeah. You don't see that as much.
Exactly.
And you can see that in Constellation Brands' like forecast. They see enterprise net sales growth down 4% to 6%. They had seen a decline of 2 to 1%.
Listen, we've all been talking about Kraft Heinz today, and for good reason. Just give us 30 seconds on what we need to really know about that.
Okay, KHC Kraft Heinz, the stock is down majorly today. They announced plans to split into 2 separate companies, but the street is not happy about it. Warren Buffett isn't happy about it. But basically, there's going to be 2 companies, one selling Heinz ketchup, condiments, box meals, and then another selling slower growing grocery products. But right now, the market's not liking it. The stock is down over 7%.
Yeah, right. They're just kind of wondering where this ultimately goes. And
Yeah.
Good stuff, bad stuff, as some might see. Thank you so much. Great to have you here. Emily Graffeo, Bloomberg News cross-asset reporter. For more conversations, be sure to check out our Stock Movers podcast. 5-minute episodes, roughly, of your top winners and losers in the stock market. Find it on Apple, Spotify, or anywhere you get your podcast. Sometimes it's 4 minutes. Sometimes it's 5. Sometimes it's 4.5.
But it's always fun.
It's always fun. All right, that's going to do it for the first hour of Bloomberg Businessweek Daily. If you are watching on TV, the close is coming your way in just a moment. We are continuing to track the markets. First September can be a tricky month. This is Bloomberg.